Okay, let me now bring on board Mr. D.K. Joshi, Director and Chief Economist with Crisil. Crisil is India's largest rating agency. Mr. Joshi, good afternoon. Thank you for joining us. Let's discuss the importance of some of the high-frequency numbers. Most of the economists and market men are of the view that inflation has topped out and IIP has bottomed out. Are they right in their assessment?
Well, I think broadly yes, but I think we shouldn't expect a very, very sharp recovery in IIP. I think we believe that second half will be better than the first half. One of the reasons is that the base effect is favorable. And second, I think there has been some traction in some segments. So overall IIP will look better than the first half in the second half. Overall, I think we expect around 3.5% growth in industry in 2012-13, which is clearly subpar.
Mr. Joshi, wanted to garner your view as
far as inflation.
Go ahead.
No, I was just wanted to, since you asked me about inflation, the inflation I think seems to be softening, and I think it has softened faster than expected, though there are risks ahead. In terms of we'll continuously see utility price increases, particularly power sector for next couple of years, and similarly the risk from oil remains. But overall, I think given that the economic activity has remained weak and it has a lagged impact on inflation, we should see inflation at lower levels in 2013-14 than 12-13, but not so low as to give comfort to the RBI, or not low enough to be in the RBI's comfort band. So I think what that simply means is that we should see some easing going ahead. We at least expect 50 basis point rate cut from the central bank in the first half of 2013.
Which is precisely the point that I wanted to dwell on. Apart from that, are you seeing any tinkering when it comes to the CRR? And what kind of language are you expecting from the Reserve Bank? Because they clearly indicated that come the next quarter, they are going to be more dovish.
Well, I think it's becoming, but at the same time, I think they also keep raising the issue of inflation. So I think we should expect some softening of rate, but not very aggressive rate cut unless there is a global crisis another time around, this time around again. So I think as I said, so 50 basis point is something that we expect, and CRR cut will depend on the liquidity situation. So I think the repo rate cut as well as the CRR cut, I think they go hand in hand, because one eases the liquidity and then that makes the interest rate cut more effective. So I think we'll see a situation where liquidity will be comfortable, or RBI will at least try to maintain the liquidity at comfortable levels while cutting the rates. Otherwise, the rate cut is not very effective.
Right. Mr. Joshi, do you think in Jan, Reserve Bank of India could surprise everyone with front-loading a rate cut? Let's say instead of 25, they do a 50?
Well, it's always possible, I think, and the surprise has a bigger impact on the market. That's also true. But I think my sense is that, or our sense is that they'll tread cautiously, and they'll go ahead with their baby rate cut approach. I think they did surprise the markets earlier when they cut rates by cutting by 50 basis points, and then after that they didn't do anything. This time around, I think they seem to be moving more gradually, and I would expect them to begin with a 25 basis point rate cut in January.
Right, and wanted to also get in your perspective on where you see the rupee headed against the US dollar, because given that there is an expectation that the current account will widen, do you think that that's going to be a weakening bias for the rupee and it's going to hover at these levels of 55 against the greenback?
Well, we have a permanent weakening bias because of the high current account deficit, and I think on the occasions that we have inflows, good inflows, I think then we see rupee appreciating. So I think my sense is that the rupee will appreciate somewhat from the current levels, but not too much of appreciation should be expected, because I think we are in a vulnerable situation. I think what one should also remember that rupee has been very volatile and will continue to remain volatile even in 2013, because the global scenario is fragile, and we'll see risk on, risk off. We'll see capital flows coming in and going out. Our current account position is unlikely to improve very significantly, so rupee will remain sensitive to what happens to capital inflows. I think, and that is a function of largely a function of what happens in the global economy, partly also a function of what we do to our economy in terms of policy moves, etc. Because I think that improves the sentiment, and we saw when the government announced the FDI reforms, etc. in August, September, I think we saw its impact on rupee immediately. Actually, rupee appreciated quite swiftly, but I think that was short-lived. So I think the bottom line is that the rupee will remain very volatile, and we see a mild appreciation bias in 2013.
All right, Mr. Joshi, appreciate your time, and thank you for joining us. That's it on the show. It's goodbye from Awan and me. Thank you for making Market Sense part of your daily life.